Well, good morning, everybody. I'm Eric Levinson with Vena Capital, and this morning I'm joined with Michael Kokolari, our chief economist, Ismail Pili, head of research. And so today we're actually doing something unique. It's an intra-quarter look at the market. Given the volatility of the market in really the second quarter, and given the volatility of just really what's going on in the world, we wanted to give you an update intra-quarter. We did our webinar in July, but given the interest in Vietnam is increasing, given what's going on in the market, we thought it'd be helpful to share some insights here in August. So with that, Michael, I'll go to you. Like I said, we did a webinar right at the end of the quarter. Has anything changed in your view of the economy since July?
Yeah, this is a good question. Basically, the scenario we had outlined from the very beginning of this year was that domestic consumption would be very strong, but that the external demand would soften as the year progressed. And that is the way things are playing out. And what we saw since the end of Q2 is kind of more data and more intensification of that theme. So specifically, domestic demand, which we look at retail sales as kind of a good proxy of what's going on with domestic demand. Recall that at the beginning of this year, retail sales in Vietnam were growing at about a 2% year-on-year pace. That just accelerated parabolically all year long. So by the time we got to Q2, it was growing almost 30% year-on-year. Well, in the month of July, that continued to accelerate, and Vietnam's retail sales growth in the month of July was over 40% year-on-year. So continuation of that theme. At the same time, we did get some data out that global smartphone sales. Now remember that high-tech items are 1/3 of Vietnam's exports, so this is a big deal for us. Global smartphone sales actually decreased by almost 10% year-on-year in Q2. And so that's reflected in some news that we've seen where Samsung, what produces about half of their global smartphones here in Vietnam, have shortened their work week. So those two pieces of information came out since the end of Q2. However, recall that domestic consumption in Vietnam is about 2/3 of the economy. Manufacturing is just over 20%. So the impact of the accelerating domestic growth is more than offsetting the slowdown in external demand. Net, the GDP growth, we still expect 7.5% GDP growth for this year, but we also have seen since the end of Q2 is more really respectable forecasters coming out with quite high forecasts. The World Bank raised its GDP growth forecast for Vietnam this year from below 6% to in line with us, 7.5%. Moody's has come out with an 8.5% forecast for this year. That might be a little bit too high. Standard Chartered is expecting a 10% growth in Q3. We were, by the way, the first ones to project that. So those are the two kind of things. Continuation of the theme and more people recognizing how strong the growth is this year.
And so, Michael, thank you for those insights. Since what we've also seen is interesting is you've talked about kind of a potential slowdown in demand from the US and the EU, the two biggest markets. It's actually been still growing, but the growth has been slowing. But on top of that, we're seeing more firms come to Vietnam, whether it's the kind of China plus one. Have there been any kind of new FDI announcements? And if so, what are the takeaways from these announcements?
Well, the overall figure is very encouraging. It's up 10%, which is very healthy, about over maybe 5–6% of GDP.
FDI?
Of FDI, inflows, actual money flowing in. But as you just alluded to, there's been some really exciting announcements recently of plans, particularly by Apple, that they're going to build the iPhone watch, manufacture iPhone watch here, that they'll manufacture the MacBook here. So that's kind of a continuation of this theme of Vietnam moving up the value chain and producing more and more high value added products here, which is great news for the country. The other thing I'll tack onto that is that, as you alluded to, this theme of moving from China to Vietnam is still, we see that continuing again in the month of July, as well. What we see is that in the first 7 months of this year, export growth to the US has slowed from about 50% last year down to about 25%. Now, I had previously expected a bigger drop in export growth, but it's not falling off a cliff because of this phenomenon of factories moving from China to Vietnam. So this also, we just had more of that happen in July as well, more announcements on that.
Interesting. So again, the economy has kind of maintained its robust pace and even increased. Having said that, going over to the market side of things, where people really, actually, they're like, okay, Michael, but we want to talk about the market. Market was basically flat in Q1, was down roughly 20% in USD terms in the second quarter. How has it done over the last 7 weeks?
Sure. So back in July, it was pretty flat. I mean, 0.9% to be precise. And then year-to-date August, we're actually up to about 6% now.
So month-to-date.
Month-to-date, sorry, yeah, August. So in that sense, you take a look at the sectors that's been leading the charge, and financials are taking the lead here. The brokers by far, but the banks have done a respectable job. Other sectors that's done well, industrials, energy, consumer staples. The laggards have been consumer discretionary, utilities, real estate, and materials. Having said that, if you want to break it down between, let's say, the small caps or small mid caps versus the big caps, you can kind of see the reflection of this play in the fact that the VN70, which reflects more of the SMID names, is outperforming the VNI as well as the VN30. So you could say that there's a little bit more of a risk on that's taking in play. The higher beta, the small mid caps doing better. So yeah, I think people are now, in terms of sentiment, looking at the market again.
Interesting. So in July, there were two key questions, and one of them was, will the banks, which is roughly, financials, I think is 31 or 34% of the index, so it's the largest weight, and the banks are the biggest component of that. Will they, lead the charge? And so has anything changed in their earnings growth? Or is it? I guess the question is it a change in earnings, or is it just a change of investor sentiment? What have you seen?
Well, the second quarter reporting season has ended, and 50% of all net profit in this market was actually accounted for by the financial sector. Our own internal forecast is we're looking at about 36% net profit growth, and that would beat the average consensus number right now, which stands about 17.5%, 18%. Internally, we're looking at about 20, let's say 25% in terms of the companies under our coverage. So the banks itself stands out, not just in terms of the growth, but also because of their size. You throw in the fact that they do have that higher beta, and if you do take on a risk-on approach, then you combine the higher growth with the higher beta, and we have high expectations for the banks to lead VNI higher.
Interesting. And so is one of the reasons that they've paused, and we had a conversation with a potential client yesterday, the kind of announcement that banks are waiting for the credit growth or the credit quota to be lifted or introduced?
So the credit quota, of course, is going to come. It's going to be between 13 to 15% as guided by the SBV. It has not come yet. We thought it was going to come in July. We thought it was going to come in August. It's almost the end of August. It may come in September. Whenever it comes, it has to happen. And part of the reason behind that is Mike and I always talk about the economy being a controlled economy. And the biggest lever they can do to do that is actually controlling credit growth. This is not like China, when it used to grow about 30%, and then you would have a GDP of 15+% and then slowing down because of the base. This is Vietnam, where they learned a lesson in 2007, 2011, where the banks kind of shot themselves in the foot. And the central bank, in our view, is saying, you know what, we're going to kind of like save yourself or save yourself from yourself type statement. And we're going to make sure that your credit growth is always going to be a very predictable 13 to 15%, but you're going to get that 6.5 to 7.5% GDP growth, give or take 1 or 2% either way. And that's probably a nice thing for investors to have, a very predictable economic trajectory. So I think the banks itself is going to do well. Again, it's something that you have to think. The VNI cannot move without the banks moving alongside it.
Interesting. And so, last question for you is, are there any other sectors or themes that you think will drive the market, the next, either remainder of the year or the beginning of 2023?
Sure. I mean, themes itself, that conveys longer-term structural secular trend. And to be honest, not much has really changed. We still continue to think domestic recovery or consumption will play out, FDI, infrastructure, consolidation, clean and green, digitalization. This is all ongoing, it's concurrent. I think the biggest part that we're focusing on more is more on the domestic recovery side. We're still in the early phase of that recovery play. We're not in the mid or late cycle phase that many countries are in, which means it points back to that thing I mentioned, beta and growth. Nice combination, banks, oil and gas, they play into that, industrial parks, maybe even ports. Those are probably the key sectors that we would look at for that play.
Excellent. And so you just talked about domestic recovery. Michael, I'll turn to you for a last question. What's your view on the health of the Vietnam consumer? We talk about GDP, 2/3 is driven domestic consumption. How is the Vietnam consumer right now?
Yeah, I'd mentioned before these kind of stellar year-on-year numbers. Well, part of that is because of the COVID lockdowns last year in Q3. But actually, if you look at the month-on-month figures, it's also growing. So consumer credit is probably a bit over 20% of GDP, and that half of that is mortgages. Consumers are in very good shape. You see it in the numbers, and also you see it anecdotally when you're out and about. If you go into the satellite cities, if you go into the countryside, demand is strong everywhere. Economic activity is really, really robust.
Excellent. Well, Michael and Ismail, thank you so much. And for those of you that tuned in, thank you so much. Right now we've got this still a little bit of a disconnect. The economy is growing incredibly well, yet the market is still certainly very, very cheap. So as you're looking at Vietnam and looking at your portfolios and thinking about adding risk, certainly we do think Vietnam is a very attractive market today. So thank you so much.